So we're Bitcoin approaching the $100,000 mark, currently trading at $97,000. And the question is, can Bitcoin reclaim $100,000, the key psychological level, as well as a technical level that if we do start to get above that zone, it will be all systems go once again. I have a sneaky suspicion, though, that we might have one more rejection from that key zone. We'll talk about what that looks like in today's show. We'll also talk a little bit more about the timing cycle and how the recent dump has affected that. Are things still on track? Are we still going to be following the same trajectory? And if so, what are the upside targets for the end of this quarter? And what are the upside targets for the end of the crypto cycle? Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into it. You can see, of course, the bubbles charts over here with a big bounce across the board. A lot of the coins are still up. So if you did buy the dip over the last 48 hours, you probably made a little bit of cash. But the question is, are you going to hold on to that, right? As Bitcoin does approach $100,000, is going to be a very key critical level. I think one of the places that you can look to get some early leads and answers is actually the stock market, right? So here we have it. Here's the stock market, the S&P 500 futures chart over here. Now, these are the key zones that I'm personally looking at. This is going to be your major support coming in for the S&P 500 futures. That is around that, give or take, you can adjust that ever so slightly, but between about 5,650 and about 5,700. So let's slap it in the middle over there. About 5,650 for the S&P 500 is the major support that you're going to be watching out for. The reason you want to pay attention to this is, of course, because it is currently downtrending, right? We have started to put in a series of lower lows and lower highs. And that means if you do bounce over here alongside Bitcoin, and Bitcoin is going to do what the stock market is going to do. And if Bitcoin rejects from 100K, well, the S&P 500 futures bounces up to just under that 6,000 and rejects, then you do have to look out for that potential target. The good news, though, is that that is going to be strong support. The other good news is that despite this move over here, we aren't macro bearish. In fact, we are looking for a major bottom somewhere within the zone. So the question is just how quickly are you going to be buying into the zone? One approach that you could always take is to pyramid in. Remember, you can buy smaller at the top and add in larger and larger orders as you do approach the lower levels, which would be the key zones. And the reason that people pyramid in is, of course, one is a risk management approach so that you put in your bigger orders at the bottom. That way, if price goes against you, you don't get so heavily hit. The other reason is that sometimes price may not reach that key point, and you might actually see a rebound from this point, and that ends up being the low, of course, front running what would be the obvious key support at 5,650. It is significant, it's relevant. We have to look at it because the stock market at the end of the day will affect crypto, and with the CPI data coming out later today, you're going to expect that's probably what's going to initiate the stock market's next major move, which means that's what's going to initiate crypto's next major move. And the one thing that I'll note over here is we did have this futures gap, the CME futures gap over here on the stock market over there. You came into that futures gap over there. Now you've properly filled it, right? We had a couple of weeks into there previously, but now you've properly filled that gap, which is why I would reserve the possibility that maybe, just maybe, if the CPI data comes out favorable, that could be the major low and you do start to reverse that trend. So if we look at the broader stock markets on the daily time frame, yes, we did break down from that falling wedge. We're very close to the 200 MA. Let's just quickly readjust this and see how far away from current levels. You're now about 4.68% away on the S&P 500 futures. And if you look at NASDAQ, from its 200 moving average, which each and every day, by the way, is rising. Of course, by nature, this is increasing. That's about 5% away. And if we do look at the Dow Jones, where the Dow Jones would be the equivalent of this pink zone, right? You can see the Dow Jones actually came into that zone. It narrowly missed it by a tick, but give or take, I mean, you're splitting hairs. You can say basically it hit that level and it has started to get a reaction out of that level, right? So keep an eye out on this. Very important. Now, how does this affect the timing cycles for Bitcoin? Where's Bitcoin currently at? One thing that we can look at is some of the trend trading tools, such as the Gaussian channel. When it's green, you usually start to initiate those momentous bull moves. This is on a weekly scale. When it's red, you're usually in the midst of the bear market. So you don't want to wait for the red, but it depends how you use this chart. The way I use it is I like to use it to try and time these cycles. And what I found was this, right? This is what I found when you try and time these cycles. So usually once Bitcoin does turn the Gaussian channel on the weekly, green once again, we can measure out how long it took before you put in the exact cycle top. In this instance, from the point of it turning green to the cycle top was 66 bars or 462 days. That was our very first bull run that occurred all the way in 2013. If we fast forward to the next bull run, which is the 2017 cycle, you can see from the point that it turned green to the point that the cycle ended was 98 bars or 686 days, right? And then we can have a look at the next cycle, which was the 2021 cycle, and this was about 120 bars. So you can see how they get longer and longer, 66, 98, 120, which is why I can make the argument that maybe this cycle is actually going to be really, really long. So 840 days on that one. Well, what would that look like if we put in 120 bars? Who knows? Maybe it goes beyond that point. But if we do put in 120 bars, like the prior cycle from the point that it turned green, where does that take you? Of course, that takes you over here to about the 10th of November, sometime in early November 2025. And the point where you expect that the Gaussian channel will turn red once again, which would ultimately put you back into the bear market timing-wise, where would you be looking? I'm not going to go back through all the other ones for the sake of saving time, but you'll be coming into the sweet spot over here, which would mean by May, June of 2026, you're already firmly back into the bear market, at which point the Gaussian channel has turned red. And you don't have that long from the point that it's turned red to the exact bottom, right? It's just a couple of weeks. So at that point, you already want to be well on your way completely out of the market with your profits, right? So if we reanalyze this and we have a look from a different perspective, which we've done many times before, remember we can base these things on various different anchors, different anchor points. The starting point, one of the starting points that we look at is, of course, the exact point at which the market cycle bottoms. By definition, the exact point where you put in that wick low is essentially actually the very, very start of the bull market, right? So in this instance, this would have been the start of the bull market. The exact low on that FTX collapse around the 21st of November, in this instance, 15,495. That was your exact low. That is the point where the bear market ended and the bull market began. That's one anchor point to look at. The other anchor point, which we've looked at before, is the halving cycle, right? Which is mathematically programmed into Bitcoin, as a protocol. That's exactly where the mining reward divides in half. We can also utilize that as an anchor point. In this instance, I've considered the anchor point from the cycle bottom, right? And long story short, I'm not going to waste time and go through the whole list over here. What we found over here is that we expect that anywhere between 46 and 49 months, which is in alignment with what we're seeing over here on the Gaussian channel measurement, you should find a cycle top. That lines up to be between August and November 2025, right? So this is just a little bit of a rough draft. As I dropped into the Whale Room community group earlier on this morning, I said, this is kind of what I'd be looking for. Now, don't necessarily hold on to the trajectories in terms of pricing targets, but I'd probably be looking for something like this. I think that it would pay more to be bullish into the end of this quarter, where I would expect a possible push up anywhere between about $120,000 and $130,000. So in this instance, I said $125,000. So looking at bullish continuation, I do then expect that we should have a major cool-off period. Now, the question of how low it goes remains, right? I'm not 100% sure. It could be something like that. You might only see price drop back down to under $100,000, reaccumulate, so you go through some sort of a correction phase, and then reload up for the third quarter as you rally into the end of the third quarter, beginning of the fourth quarter, and then you could possibly end off the cycle maybe between about $180,000 and $200,000. The price target will definitely depend on the speed at which the moves take place, right? You need to see that there's at least controlled growth within Bitcoin. When you do get these parabolic phases, like we saw in 2021, like we saw in 2017, then the upside targets cannot reach the heights that some people are looking for, right? Like I remember in 2021, based on the speed of this move over here, you can see structurally, there weren't any major pullbacks along the way. Yes, we did get quick dips, but timing-wise, the corrections didn't last long enough. And consequently, we topped at about $69,000, whereas the majority of the people following this dip over here were actually looking for Bitcoin to run all the way up into the $120,000, $150,000 region. I remember the average price target was somewhere around $180,000 for that particular cycle, right? So it depends on the speed of the move, right? We'll keep an eye out on that. In terms of the ROI, this has just recently been updated, and we are following really, really nicely in comparison to what we did with the 2017 cycle. You can see that over there. This in 2017, around the 800-day mark, where we are currently situated at day 798. But on the 800-day mark is where you started to see rapid price appreciation and a markup, right? If you compare the green cycle over here, around that marker is where price started to hold flat and then slowly roll over for a little bit of a correction. So far we're following much more similarly to what we saw in 2017 in that cycle. And that was also a very long cycle, right? A very, very long cycle. If you have a look at the cycle over here, you can see, look at how similar that has been, right? So around this 800-day mark is actually where you would expect that rapid price appreciation. If my little thesis or trajectories play out, which would be this, a rally up into about the $120,000 to $130,000 level, and then a cool-off period later on, it would look very, very similar to this, right? That means that between now and the end of March, you're looking for something like this: rapid price appreciation, and then a little bit of a correction, right? That would be the major correction that you'd see from March into May. That would be from around about day 880, which is about 2 months, give or take 2 to 3 months from the current price action now in terms of where we are. And then you're looking for a big reset and then the final leg up, right? The final leg up into the blow off top, which would look like that. So stay tuned, subscribe to the channel, follow me on Twitter as well, X. There's a link in the description below that will take you to my X account. Make sure that you follow me over there so that you can get the information as soon as it is relevant and comes out, right? Because that's what we're looking at. We've seen the very, very healthy reset. Is this move that we've had to the downside enough to have reset the market? I do believe that it is. I definitely do believe that it is. Part of the reason why is I can pull this screen across over here very quickly is we have absolutely seen a complete reset on the open interest when it comes to leverage trading on altcoins, right? They've been completely annihilated. And in fact, in the last year, we've only seen one time period where things got a little bit overheated. And I'd even argue at that point in time, it wasn't completely overheated through the roof, irrational exuberance. It was just slightly overheated. And that time period was in February, March of 2024, right? Now we're in 2025. The funding has been flat completely, right? Completely neutral. Funding refers to the market participants' willingness to pay high premiums to keep long positions open, right? Leverage long positions, which usually is paired, hand in hand with greed, right? Which means if you have negative funding or neutral funding, then there is not as much greed as you would expect in the market. This is a much more, at least my personal opinion, objective measure at trying to work out the fear and greed within the market, because this is what people are actually doing with their money, right? As opposed to the normal fear and greed index, which they use a whole bunch of different sentiment-based data. Sentiment-based data is not objective, it's subjective. They're looking at certain words that are used on Twitter, keyword phrases, etc., that elicit fear, and we know how sarcastic crypto Twitter or X can be, right? Which means that it can affect, of course, the fear and greed index, in my personal opinion. So in terms of how risky is the market to be in right now, well, I don't believe it's too risky. And we can actually also use some objective data to determine that. And that objective data would be this, right? The total time spent in various different risk bands. Where are we currently situated? We are currently in the 0.5 to 0.6 risk band. This one over here. This is typically a reaccumulation phase, right? Not your trending phases. The trending phases typically occur in the more extremes, right? So trending phase towards the downside would be if you in this sort of a risk band over here, people are very, very fearful, prices coming down very hard, and this is where your tops are placed on the right-hand side. When you're in the mid-curve zone, you're kind of just in the neutral territory, reaccumulating, preparing for the next major move. So how long can you spend in that risk band? 0.5 to 0.6, where we currently situated a long time, right? This is measuring the total cryptocurrency market cap. You can spend 1,365 days. Typically, that's the most amount of time spent in that zone. Why am I telling you this? This is considering all data over cycle 1, 2, 3, 4, and 5. If we isolate to just cycle 5, which is this current crypto cycle that we're in, well, this is what you can see. It's very, very telling. Why is it telling? Because you would expect that the market cycle would only top when you get into extreme risk. And if you look at this in terms of the bar charts over here, well, it tells you that how many days have we spent in the 0.7 to 0.8 and above risk levels? The answer is zero, absolutely zero, naught. We haven't spent any days within those risk parameters, which means that this is an objective means, just like looking at the funding rate heat map. We have not yet seen that bull market like euphoria come back or in the cycle at all, for that matter. We haven't really seen that, right? It's mostly been very controlled, orderly price action, very, very systematic. And usually in extreme exuberance, you get erratic behavior within the markets. It hasn't been that erratic. It's mostly been systematic, controlled. And that means that probably we haven't seen the fully fledged retail rallies that we've seen back in all the other price cycles where, of course, your beloved altcoins do crazy things, right? So that's a little bit of a glimmer of hope for those of you out there that maybe you're really fearful that you missed it, you missed the whole cycle, it's over. I definitely don't think so. That's what I'm looking at. Another trend trading tool that we can utilize, of course, is the 𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓 indicator. The 𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓 indicator uses a conglomerate of different exponential moving averages. There it is. They basically go up in multiples of 3, 3, 6, 9, 12, 15, 18, 21, and so forth. And it throws it onto a chart. Now, usually you get strong trending moves when prices above all of these EMAs, and all of those EMAs from lower to higher are consecutively above one another. So the 3 is above the 6, 6 is above the 9, 9 above the 12, 12 above the 18, etc. Right? That's where you get the strong trending moves. Now, you have had a little bit of a price compression, but those EMAs still remain above one another, which is why you have on Bitcoin, the 𝗓𝗓𝗓𝗓𝗓𝗓𝗓 remains green with that wick that ran through, and you got the 200-day moving average hanging slightly below that in the blue, and that is your major support on strong pullbacks, right? So again, very orderly price action coming back, a little bit of a correction, flat price action, holding you, of course, in that 0.5 to 0.6 risk level over there as price reaccumulates within the zone. And we're still waiting for the crazy times to come, right? We haven't yet seen it. If you look at the total cryptocurrency market cap, excluding Bitcoin, well, that one's turned a little bit gray, right? So this will be Ethereum and all the altcoins. Gray just means neutral territory. It wouldn't necessarily mean you're shorting the market, but it means you're prepping for it to turn green again before you do start to long the market. This is if you're in isolation using this as a trend trading tool. Next up, we have the total 2 chart, which excludes Bitcoin and Ethereum. And this one still remains green, right? So the majority of the altcoins still remain green, holding within that trading range, reaccumulating possibly, and prepping for the next move up. If you look at the others chart, which miners is the top 10 from CoinMarketCap or CoinGecko, so it's looking at the more degen altcoins. Well, these have been a little bit more hit than the rest of them because it was green, started to turn gray. The good news is it hasn't turned red. If it turns red, well, then we're possibly initiating a downtrend. Chances are that this was just the final shakeout before the next major move up. And this would all be in alignment with the timing that we're looking at, right? According to this, we should start to see some sort of a markup in the next couple of weeks, right? I think definitely emotionally, a lot of people have been shaken out of the market as well. We can often tell this in the views, right? In the YouTube views, which we can actually look at right now. So if we go to the YouTube views, this is also one of the risk metrics that we're utilizing to determine when to possibly exit the market. And if you do look at the YouTube views over here, well, you can see they're low, right? They're very low. YouTube views are back down to low levels, sitting around across all of these various different channels, just hovering around 1 million views per day, right? We expect the market cycles to top with more than 4 million views. We should take out the 2021 highs, right? So keep an eye on that. Watch for that. Very important to be looking at over there. And let's move on. So moving on from the 𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓𝗓 into those charts in isolation. When you look at the total cryptocurrency market cap over here, to me, this is just creating an order block before the next major move up. Now, the next major move up is where I probably will not be able to, at least suggest that anybody aggressively starts entering into crypto when we do start to initiate this move up. This is kind of your last opportunity to get in on the total cryptocurrency market cap. Total 2 showing the same thing. Remember, with the end target in mind, coming in from the point at which you start to break out over there around the halving cycle. That is 539 days later, which also takes you into the end of October, beginning of November, right? So good things to look at over there. If we look at total 3 as well, we still haven't closed any candles above the all-time highs, prior all-time highs. So this should trade above of course, it should get at some point above that $1.14 trillion mark. And then you're looking at continuation beyond that into price discovery. And that's where you probably actually want to be taking a bit of profit as opposed to thinking about entering into the market. So final opportunities to be getting in. Others chart perfectly backtest into the neckline of the massive cup and handle formation. And that neckline can give you a bit of an indication with a minimum target of about 95%, which means if you do enter into the altcoin sector, at minimum, you're looking to at least double your money with the breakout of this pattern, right? Of this chart pattern from current levels. Very, very important chart to look at is the total 3 chart, which did create the break of structure. We had the downsloping trend line over here, or your pivot level. I said big X on the spot over there because it's unlikely that we're going to hit that. I said, no, I don't think that we're coming that low down. When you measure the altcoins against Bitcoin, I think the tides will turn sooner. And so far, at least that seems is in agreement with the seasonality to be happening, right? Big move up, break of structure, throw back down, a little bit of a shakeout over there. Now it's testing the previous break of structure level, now holding that as support at the 0.5 level, which is good, right? That's a good sign. We want to continue to see that. If you look at the others chart, well, this one is struggling a little bit. It needs to also start to close above the break of structure, but nevertheless, you did the break of structure high. You're putting in those high lows. Now you have invalidations below these prior wicks from the 16th of December. You don't want to break and close any candles below that. You want to maintain this posture. And then we need to see this make its way up towards the 0.26, break that level, and then we can hopefully get rapid markups. The important thing to understand over here is that when the risk does come back into the market, it is super quick. It is very, very, very fast, right? These moves happen so quickly. So you want to be positioned while you have your invalidations very, very close, right? Remember, that's what trading is about. It's about managing your risk. It's about identifying first and foremost, if you want to enter into this trade, you form your bias, right? Form your bias. Is my bias long or short? If the bias is long, first thing that you ask yourself is, if my bias is long, where am I wrong? Where am I incorrect on this trade idea? Where do I have to cut this position, right? And right now, we're very close to the invalidation levels, which means you can take on a whole lot less risk, which means you can actually allocate more capital now into the trade than when you all your little tingles are going off because price action feels good, right? When it feels good and you're breaking above here, that means your invalidations are down here. And that means your risk is absolutely enormous, right? People usually get this completely the wrong way around. When you're very close to your invalidation over there, this is where you should be absolutely sizing up, right? That's a dollar sign there. That's where you should be sizing up within that zone over there because you're taking on less risk. Cool, let's continue. Next, ETH BTC, right? Perfectly coming back into the trend line. When will this thing ever get relief? I am seeing a lot of ETH maxis even starting to capitulate right now on X or crypto Twitter, saying that's it, they're done, they're over this, they're selling all their ETH, they're moving into something else. Maybe that sell-off will create one more big drop down into the demand zone, right? The yellow zone over here is your demand zone. I've been very, very doubtful whether it will get that bad that you'll go into there, but of course, anything is possible. Absolutely, ETH BTC could drop into this. Remember, eventually, when you do see the breakouts from the altcoin sector, that is where all of this will run, right? But if you want to be patient and you want to wait for the confirmation, that's what you're waiting for. Clear the yellow line. That's your breakup structure at 0.040. For those of you confused, ETH BTC is not a ticker. You cannot trade. Well, you can actually trade this on some exchanges like Prime XBT actually offers it, believe it or not. But the way that you look at this is if ETH BTC is going up, it means Ethereum is going up faster than what Bitcoin is, right? It's outperforming Bitcoin. If ETH BTC is going down, it means you're losing Satoshis or you're losing your Bitcoin value if you're holding Ethereum over Bitcoin, right? So just to clear the air over there, I hope that makes sense for you guys. Now, if we look at the Bitcoin dominance, still chopping about over here. We've spoken about this mid-level. That's coming in at 58.24%. We want to see acceptance gain below that level, and we want to see continuation of the downtrend because that will elicit that altcoin season that you all want and are hoping for, right? If it does gain acceptance above this level, well, the 0.618, which is where we previously rejected from, is still going to be a relevant and major resistance level. And if it gets above that, well, of course, that means your altcoins are getting obliterated and we're probably dumping one more time. We'll talk about what that would look like on the lower time frames There may be one more move towards the downside. We'll talk about that in a minute. Just stay tuned until the end. Now, with all of this being said, if we get the breakdown in Bitcoin dominance, if we do start to see ETH BTC running, if we get the breakout of others in total 3 against Bitcoin, and all of total cryptocurrency market cap is moving up, we need to see the daily exchange volume rising. Right now, the good news is that it kind of is rising, right? You can see slowly putting in those high highs and high lows. We want to defend this level, and we expect fully that it should take out the 2021 highs, just like the 2021 highs took out the 2017 highs, right? We're still waiting for that. We're getting very, very close to at least the next move up, the next big volatile move, right? And why? Because we can see over here, right? There it is. BBWP is completely reset. Bollinger Bands have squeezed in very, very tightly. So tight Bollinger Bands means expect expansion, and this could go lower. I don't want to misguide you. You could easily see something like this. So be prepared for that. That's why you need to be careful. I'll show you on the low time frames, if you do get the rejection, what that would look like. Of course, ideally, you start to get these crossing towards the upside and full momentum shifts, right? But you can see previously what happened. Big move up, comes down, and runs it one more time, right? So it can be choppy. It can be frustrating. This is what trading is about. But the good news is, of course, this key level over here so far looks pretty good, right? This big candle that we have over there, the big wick, it looks pretty good. We have price above the yellow line, which means the RSI and the daily is slowly starting to turn back towards the upside. There it is. It is rising once again, meaning the pendulum swings. We've spoken about this a lot. The pendulum swings. Bears take over for a bit. If they can't break things down hard enough, bulls get their chance. This is bulls' chance now, right? The bulls have their chance to swing the pendulum in their favor and continue to rise prices. So price is now above the 9 and the 18 exponential moving average. We do want to see the 9, which is the yellow, cross back above the 18. That will provide added support whilst holding above, of course, that all-important level over there. But we do have a big wick, right? We've spoken about this over here. We have this big wick over here. We're targeting somewhere around the 50% level. Keywords, if there is a rejection, that means $91,754. If there is a rejection, which would come probably from $100,000. So if you watch and as price moves up over here, if you get something like that and you come back down one more time, that would be the level where you could regain an entry under the presumption that you're not in the market, right? Okay. So that is Bitcoin on the daily time frame over there. We have a lot of support underneath as well. 200 EMA, 200 MA, all situated below. Yesterday, we spoke about the liquidity overhead. We spoke about how we flushed all the liquidity to the downside. And now the next strongest liquidity was coming in at 96,500. As you can see, we've hit that, right? We have now hit that level, but there is also new liquidity building on the downside, which looks to be stronger than the upside. That is coming in at $75,000, $76,000, right? Between those two levels. I'm not calling for this, although there is a CME gap, future CME gap at $77,000 for Bitcoin. So, hypothetically, if you did run for that gap over there and there was one more massive scare, then expect that, or just keep an eye out on this, I should say, to see if it does continue to build. But we hit that liquidity. The good news is that we didn't hit the liquidity, capture it, and immediately reject towards the downside. Instead, we took that liquidity in the form of short traders stop losses, and price has held sideways. One good sign, right? One, at least in the bull's court. Okay. Range bound environment over here, also reclaiming the 50 and the 200 EMA. It would be really, really good to see these cross back towards the upside, reclaim the mid-range over here, which would be getting above 100. Now, that's probably the main message that I have today for the short-term traders. If you can see price get and hold above $100,000, call it 99.4 because that's your mid-range. So if you want to round it up, holding above $100,000 will be very, very, very significant. That should turn all of these EMAs back towards the upside. RSIs will start to trend up on the high time frames as well. Stochastic RSIs move up. Volatility potentially starts to expand, although I think only real high time volatility expands when you get above the prior highs over there at around that 108K level. So it is a short-term trader's game at the moment. It's not really an investor's game right now. This is a short-term trader's game. And if you are a short-term trader, please do remember you have lower lows and lower highs, right? What that means is the higher probability play over here is you probably going to move up towards this $100,000 mark. And then you should mentally prepare and expect that there could be a rejection. So just clearing this up, it probably does something like this, right? The good news is if it does do something like that and you put in the higher low, you could possibly make the argument that you have a inverse head and shoulders formation, which could be forming within this region. So left shoulder, head, and then somewhere around here would be your right shoulder. That should simultaneously fill that wick over there that we marked off on the daily time frame, 50% of that wick, basically getting your final long entries. Now, there's no guarantees that that happens, right? We have seen crazier things before where Bitcoin does just V-shape out of there, leaving absolutely everybody behind. Of course, that can happen. It's just from a technical analysis perspective, the higher probability play does suggest rejection, pullback, and then you're on high-low watch, right? Then you're on high-low watch. You want to see, is price going to hold and create a high-low, somewhere around that $93,000, $94,000 level, right? So we'll update you day by day, which is why you need to watch the show each and every single day. Another important thing that I'll mention is keep, your finger on the pulse of your portfolio. I have recently just dropped my entire portfolio, the updated version, following making a couple of changes after this recent move towards the downside. I have shifted things around. Anyone that wants that, of course, you can firstly get that in Whale Room, which is the private Discord over there. I use CoinStats, right, for my portfolio tracking. Any of you want CoinStats as well, they're giving you 50% off if you do sign up today. So it's about $7 a month. I think it's really, really money well spent. If you're anyone that has a portfolio over $5,000 to $10,000, it's a must. You have to keep track of where your money is, how it's fluctuating, and how to, make those changes, right? What I typically do is I have a look at, it shows you what's performing well, it shows you what's high risk, low risk, medium risk, and I make my adjustments based on that. So there it is. This is what it looks like. There is also a link below. It's a special link that entitles you to the 50% off over there. For those of you in Whale Room already, you'll find the portfolio over here. I did just drop it. There's all the changes. You can see how much cash I have left in that portfolio, and I'll be looking to deploy possibly on that next high low if we do get it. So we can have a look at some of the altcoins. ETH has come perfectly into the mid-range over there. We can look at Solana, right? Solana narrowly missed the mid-range. Let's see if it deviates and gets back into the old trend, right? That's a possibility as well. Right now, I'm going to zoom in. So if we look on the daily time frame, right now, this is, if you start to close a full-bodied green candle above this 193, that's going to look like a major, major shakeout. And then it's going to start to look good. Of course, you do have resistance to contend with overhead. And at the end of the day, there is also that daily downtrend to contend with, right? So keep an eye out as Solana basically approaches around that 205. That could be a possible rejection area. And then I think maybe put in a high low on the next dip over there. So that's one thing to look at over there. What about 𝗬𝗎? 𝗬𝗎 is narrowly holding up, right? The fact that it took out yesterday's low is a little bit of a scary sign already. I spoke about this a lot. I said if you do break this parabola, which, you can almost argue it's already been broken with a daily candle close below. The unfortunate thing is with parabolas, they're not that objective, right? They're not perfectly objective like other charting measures, but you got the lows, high lows, high lows, high lows, and now you're starting to close candles below there. The fact that it's doing that, of course, is going to open up the possibility that you do something like this. $3.97 would be your first bounce area for major support. If this does, of course, roll over, you have a high, you have a lower high over there. That is your first warning sign. Yes, it could be part of the broader shakeout, and this thing could get sent, but I know how hyped 𝗬𝗎 is right now. People are very, very bullish on this. So don't be surprised if you see something like that. I too hold a bit of 𝗬𝗎, but a small position relative to the rest of my portfolio. I would be willing to at least trade some of my Solana into 𝗬𝗎 to build a bigger 𝗬𝗎 position if I saw something like this and we hit down to target 2, which is slightly below $3, right? Okay, so that's one thing to keep an eye out on. That is something important over there. We've also spoken a lot about in terms of the levels over here, right? The reclaim of the yearly open opens up the long trade. So as the title of the show suggests, once you see this, buy these cryptos like crazy, of course. I don't create all the thumbnails and titles, but as it does suggest, if you can start to reclaim the yearly opens, that's where you transition from a risk-off environment back into a risk-on environment. So you can view it like that. Basically, anything above the yearly opens over here creates the momentum and potential for prices to go higher, and anything holding below the yearly opens over here on any chart that you're looking at creates the risk that you could drop down a lot further. This is kind of like the line in the sand, right? The yearly opens are the line in the sand. Solana is reclaiming that yearly open, and as per the closing candles, you do theoretically have a high low, right? You have a high low in play, which always opens up the possibility you might get a W formation. Remember, that becomes the neckline, and automatically that trades it back to the highs, right? So one thing that I'm paying attention to as a possibility, especially given that beautiful demand wick that we have over there. If you look at 𝗬𝗓, though, 𝗬𝗓 actually never took out the yearly open. The yearly open's coming all the way down at $4.11, right? We can have a look at a couple of the other coins. Here's ETH. We spoke about the possibility of the deviation. You got the perfect sweep of that liquidity, right? Sweep of the liquidity, taking out leverage long, low leverage long, people on like 3 to 5x leverage that held for a very, very long time, wiped out, right? Wiped out with that sweep below, reclaiming, get back above the yearly open, which is 3,335, and it's possible that this thing gets sent. A coin that I've been heavily disappointed in, which I did update, that was one of the changes that I made to my portfolio. So just for anyone on the shows that had been watching, one that I cut over here, where is it? We got a lithium, right? Absolute shocker. It is theoretically at range lows, right? Fair enough. This is range lows. But if it hasn't performed the entire bull run, I don't really want to hold on to a loser. I moved some of these positions into the AI agent narratives, AI16Z and virtuals, right? Some of the others had pumped too much for my liking, so I haven't jumped into those. We can talk about that just now. But yeah, that's something that I'm looking at. Of course, Casper's put in a pretty sizable move over there, having come nicely towards the range lows, narrowly missing that, but reclaiming the yearly open. That is Casper, right? So Casper I continue to hold in my portfolio. Injective was all the way down at range lows. You did get a wick into there. You've reclaimed the yearly open. So in terms of valuations, probably not too bad. From a technical analysis perspective, you want to buy support, buy the range low, and you want to sell resistance, right? So its major resistance is about 152% up. Probably not a bad place for this, right? TON, I think, could come lower, but it likely moves in accordance with the rest of the market. If Bitcoin does put in a high low and breakout over here, you probably don't see TON come down lower. But if Bitcoin does come lower, TON becomes a buy all the way down here into 460, right? 460 has been the range low, especially if you get a wick through. If you get a wick through and immediately it closes back above, that's a strong sign. Okay. Aptos looks okay. I don't have anything, positive or negative to say about Aptos. Aptos obviously marketing itself as a Solana competitor. Could it do well? Possibly. Chart-wise, it's kind of just in the middle of no man's land, hovering underneath that $12 region, which is the mid-range, right? Okay, let's touch on Hype quickly. So Hype doesn't have too much chart history, but theoretically, if it can start to break above the yearly open, it would also break structure, right? It would simultaneously start to take out those lower highs, which is at $25. And then that opens up the chance that maybe this is just a massive high low. I don't think that you need to chase it either. I think that you'd be waiting for something like this. And then you probably anyway get a throwback, at which point you're going to buy it with more confidence, a lot lower with a more structurally sound high low. So that is for Hype. For any of you out there that do want to get into Hype, that's what I'd be looking at over there. All right, what else? What else have we got? I did mention to the whale room community yesterday, Stacks not too bad. Also coming into the range low support over there. Major support, attempting to reclaim the yearly open. It doesn't look too bad. Let me share with you some other positions as well that I thought looked really decent. Let's go to Pepe. So Pepe, there it is. Hit the demand zone, holding nicely, right? It's got a long way to go in order to reclaim the yearly open, which is at 99.8. But nevertheless, in terms of key levels that hit the demand zone and you started to get a bounce. Another one to look at, right at that range low, right? Woof. I think that looks really good. If you believe Solana will perform this cycle, then 𝗬𝗢 should really do well, right? Dog with hat, the hat stays on, right? Woof, woof. So let's see if this thing can start to reclaim the yearly open. If it does, it's got a lot of work to do to reclaim these breakdown levels. But in terms of drawdown on your capital, you have a clearly defined invalidation level, which would be if there's any closing candles below this wick low. That's your invalidation. Remember what I just said. You want to buy in as close to invalidation as possible. Brett is the next one, right? Coming perfectly into that parallel channel, upsloping parallel channel, narrowly missing the demand zone. Theoretically, you can maybe just give it a little bit of leeway and say, well, it tagged it, right? But super close, super clean chart over there. Brett is one of my top picks. These are some of my top picks, right? In terms of my meme coin allocation, 𝗕𝗬𝗕𝗬𝗕𝗓, with Brett and 𝗤𝗡, right? These are some of my top picks over here. So there it is. You also have high highs and high lows over here on 𝗤𝗡. And I would like to see it flip this level, reclaim the yearly open, and then this one can be off to the races, right? So, of course, if we look at if we should actually allocate these together, so let's put 𝗕𝗬𝗕𝗬𝗕𝗓, Brett, let's put Andy on ETH and 𝗬𝗢. I think this is the wrong 𝗬𝗢, so we can delete that, and we'll try find the right one, right? Land 𝗬𝗢, so 𝗬𝗢 USDT. Let's see, is this the right one? This should be the right one. We'll double check it. Land 𝗬𝗢, it should be this one. Land 𝗬𝗢. Okay, let's just double check. Price is down at 5348. Let's have a look over here. 1542. So that is the wrong one. Let's attempt that again. Let's go to Land 𝗬𝗢. Remember, these are Matt Fury's collection, right? They're all friends. Land 𝗬𝗢. So let's go again. 𝗬𝗢. Try that again. USDT. Let's do the BitGet one. Hopefully this is the correct one. I think he is purple. So 1564 and 1542. 1564, 1542. Trading a little bit different, but that should be good enough if you want at least trading view list. So 𝗕𝗬𝗕𝗬𝗕𝗓, Brett, Andy, Land 𝗬𝗢. These are the ones that we're looking at. If we do look at Andy, well, what do you see over here? You hit the daily fair value gap, which was the fair value gap was created on the 6th of November. That's your demand zone. You've hit that level, upsloping trend line, high highs, high lows. Perfect tag of that. I hate that candle over there, that wick over there from a bullish perspective. Not good. But nevertheless, give it a little bit of chance, right? Give it a chance over here. These are very, very high beta plays. This is like trading ETH on leverage with no chance of liquidation because you're not actually opening a perpetual contract, right? So those are ones I'm looking at. Here's 𝗬𝗢, right? Now we can quickly just redraw this. I would say, this is your major demand area. This is the major demand area. Theoretically, you've hit it. Let's put it in yellow. There it is. And we'll label that. There we go. Theoretically, you have hit this demand zone. Perfect. So possibility of a move out of here. Is there any sort of a trend line we can throw in? There we go. We can also put in a trend line. Maybe you get one more sweep lower. At the end of the day, somewhere around here, we're looking for this to reverse, right? It does need to get above the yearly open to confirm that major high low. When ETH runs, if you believe ETH is going above $7,000, well, then you can bet your best dollar that these are going to go up probably 5 to 10 times quicker than what Ethereum is, right? So you do the math, you have a look at it, look at the market cap. Those are at least some of my top picks. We got 𝗕𝗬𝗕𝗬𝗕𝗓, Brett, Andy, Land 𝗬𝗢, Dog with Hat. We got 𝗤𝗡. We got Giga. That's another one, right? Giga over here. Giga Chad has done really, really well, but it needs to very quickly get back above the yearly open to confirm this as a shakeout and a higher low. That means the yearly open's coming in at 0.07. That is the level to get back above, right? Around that 7 cent region. Turbo as well, special mention to Turbo. It could drop one more time to the parallel channel. It has tagged the demand zone, something to look at over there. Ponky also putting in an SR flip over there. Those are some of the key zones. For those of you asking about Goku, yes, of course, Goku, nothing changes over there. I continue to hold every single Goku token, holding above $10 million, right? Which is a good sign. So let's just let that refresh, holding above $10 million. I wonder how this coin will perform when it's, easy money mode, when everything starts to rally up again. Okay, other ones to talk about very, very quickly over here. We can have a look at, firstly, some of the real world asset sectors. You have, Polytrade over here. Polytrade's one to look at. Forming a range, possible deviation, keep an eye out on this one. If it does get above the yearly open, you know that might be your deviation confirmed, at which point you can look to trade this at least up 80%. I do think that this could be one of the good ones to look at as a real world asset play when the market does actually start to run, right? So that's one to look at over there. What else have we got? We also must talk about AI16Z, because this is one of the trades that I took. This was the basis of the trade. Coming into the SR flip, I took the long trade over there. And yeah, we're up, right? We're up. We need to see continuation. What I did warn the whale room community of yesterday when I took the trade is just be careful, right? Be careful that this doesn't lead into a complacency bounce like that. Meaning this was your peak euphoria, right? Thrill, euphoria, blah, blah, blah. You come into the blow off top over there. You come down, you set in a complacency bounce, and then just bleed out for the rest of the cycle. So this trade would require active monitoring, right? You can't just buy this, hold it for the rest of the cycle and hope for the best. It needs active monitoring. If it gets above those highs, I mean, you have a generational entry. This thing should get absolutely sent, right? So that is AI16Z. Let's quickly go to virtuals, which was the other one. Virtuals over here. Virtuals, click on that. There it is. I mean, very, very similar trade setup over there. Virtuals coming into key support. So perfectly hitting into that zone. There it is. SR flip, right? What was your previous support? You've revisited into that zone over there, hitting it as support once again. Same story, right? Because the AI agent narrative, I think, is very, very hyped at the moment. Things can get crazier. We don't know. That's why we just need to be careful. Be careful of the lower high. I see some of you asking about what's the other one now? Now I've lost that comment. AIXBT. That was the other one I was looking at, but it just ran too hard, right? AI, what is it again? Let me just find that again. AIXBT, USDT. Okay, this one over here. I was definitely interested in taking this trade, but I missed it, guys. I mean, well, I'm not going to buy it over there. There's no way. So if you got in, congratulations, continue to hold this trade. If I am interested in this, I'll wait for some sort of a retrace, because following such an enormous move, of course, what do you have over here? You're going to have a daily inefficiency candle, right? Fair value gap. There's your fair value gap. So I'll buy it later if the narrative is still good. For all I know, you know, this thing can just run up like that. But eventually, I'm expecting a revisit into that zone. When you get that revisit, yeah, possibly that's when I'll start to at least look for the entry into that trade. All right, what else? What else? I think I had one more, which was Rose, right? Under the privacy network. So if you are also looking for something a little bit different, Rose has been putting in high lows. Again, reclaiming the yearly open will be significant because this is a big SR flip region, right? You can see over here, resistance, 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 flipped into support, support, and now possibly just another test. If it holds this as support on Rose, there we go, Oasis, right? Rose or Oasis, deviate that level, reclaim, and then you have a trade opportunity back to the top of the range highs. So those are some of the opportunities that I'm looking at over there. Some of you are asking, you know, 𝗕𝗬𝗕𝗬𝗕𝗬, I am still holding 𝗕𝗬𝗕𝗬𝗕𝗬𝗕, by the way. A lot of these coins, you'll get the full portfolio, remember, in the Discord. What I do want to remind you of as well in the Discord, for those of you members that are there, please do go through to the Ask the Team section, and you'll notice that I've been, you know, heavily involved over here the last couple of days. I've been answering every single question that you have. Don't all go there at once, because if there's going to be 5,000 messages over there, then I might not be able to keep up with the load. But other than that, I've put your chart requests. I've done everything that you want over there, answered your portfolio questions, whatever it is that you need. I know in the troubled times when the market comes down, you guys need assistance. I am there for you. Please, if you do want to join, guys, use that link in the description below, right? There is a link over here for Whale Room. There's also a link for Whale School, which is free, right? So go through to the Whale Room. There it is. Whale Room link is over there at the top. Whale School is over here at the bottom. If you click that link, you can start signing up. Whale Room is a paid product, of course. Whale School is completely free. So if you don't want to pay anything, but you want all the educational content, that's learning how to trade like a whale in just 10 days. It's free. You need to sign up now. Last I checked, we were at about 68% capacity, right? So you need to be quick if you do want to join. That is it from me, folks. Thank you so much all for joining. Hope you all have an absolutely lovely, lovely day. And let's see if the bull moon persists, right? We'll catch you on the next one. Have a great day. And cheers for now, guys.